Okay, so today's lesson has to do with the income statement and the balance sheet. So far, we had practiced the extracts for either the income statement, where you add the accruals and you less the prepayments from the expenses and revenue. And then we have been doing the balance sheet extracts, where we just dealt with the current assets and current liabilities in terms of the prepayments and accruals. Today, after going over some of the activities and the answers to the activities, and then the process that you may be able to use when you are doing these activities, then we are going to introduce you now to the entire income statement and balance sheet, but this time with the accruals and the prepayments. Now, it's just a small addition, because you guys would have already learned how to do the full income statement and the balance sheet, but without the adjusting entries. In this case, you're going to learn how to add the accruals and prepayments to these financial statements, which will be the income statement and the balance sheet. So as I said before, our lesson today is going to be about putting it together, meaning the financial statements, so the final accounts. We're going to be doing the income statement extract, a review, and we are also going to do a review of the overview of the balance sheet extract, and then we're going to end with where we put an entire, you're supposed to be able to do an entire income statement and balance sheet, now applying these new things that you have learned in terms of the accruals and prepayment. So we will start a bit with in terms of what you remember, like what is the purpose of accounting? It is identifying, measuring, communicating financial information to various users. But why? So that those users can use that information and they can make informed decisions. So this is the main thing. I don't know if anybody remembers, but the purpose of accounting is really about giving them financial information, or providing the users with financial information. Remember the internal users and the external users, providing them with information so that they can make important business decisions. Right? So we have a very important role as accountants that we really have to take, we really have to put a lot of value in, because the decisions that they make can affect them financially, either for the best or for the worse. So how we do that, how do we provide this information? It will be in the form of the financial statements. The financial statements which we prepare, which we are going to learn for this lesson, the income statement and the balance sheet, very important in terms of giving the information that is necessary by the users. So when we do our journals and our ledgers and the trial balance and all those things, we are getting all this information, and we are gathering and collecting and combining that information, and then at the end of a period we put it into the income statement to calculate our profit, and also our balance sheet to see what the financial position of the business is. And then what we had done before, we had done the ratio analysis, where we use that information and we analyze how the business is doing in terms of profitability, liquidity, and then of course in terms of turnover. So that is what we had done. But now we're back to the presenting of the income statement and balance sheet, because what we learned before is a very simple income statement and balance sheet, and we are now going and we are adding the adjusting entries to it. And the first adjusting entry that we have started would be the accruals and the prepayments. So that is what we're just continuing. So here's a reminder of what the full income statement looks like. So if you would remember, the first part of the income statement was the most challenging part for you guys to memorize. You really do need to learn this first part for your income statement. Now, this is a sole trader, but all the other businesses that you are going to learn, it's the same format with some additional things, but the foundation is this. Please learn this first part. And then the second part would be your revenue or your income and your expenses. And this is the part that we do for the accruals and prepayment. And we're going to continue, but that is an extract. So we have just been concentrating on this part. And then at the end, we're going back to the entire income statement. We also did the second financial statement or final account, which is your balance sheet. Once again, this was a simple balance sheet. You had your normal, non-current assets, current assets. I ate baked chicken, but we would have learned with the accruals and prepayments that we now have to add two of them. I don't know if you remember which two, but that is what we're going to be reviewing: the prepaid expenses and the accrued revenue. And down here we are adding the accrued expenses and unearned or prepaid revenue. So those were the simple, very simple income statement and balance sheet. But what we have learned, it's accrual world, meaning according to the accrual concept, we have to make certain adjustments. And the adjustments, one of them, the first one that you are learning now, would be the accruals and the prepayments. So we are going to go into, I hope all you know this by now, because you should be tired of seeing this every single time we start with it. 4 of the accruals and prepayments: accrued expense, accrued revenue, prepaid expense, prepaid revenue. So we I don't know if you remember, we had done this exercise. So if you ever want to stop, and these are the answers for you. And this was where we were just identifying the 4 types and the amounts. So you have to be able to do that. That is the first step in the doing the financial or preparing the income statement and the balance sheet. Being able to identify which of the 4 it is. There's no way that you can do the income statement and the balance sheet with the accruals and prepayments if you can't first identify. So we spent a lot of time on that. So that is something that you really do need to get into. And then we go into the income statement and preparing the income statement. And what you would have been introduced to would be that there are additional information, or what we call the notes to the accounts. So you learned the trial balance, and the only thing that you knew that was under the trial balance was your closing stock or closing inventory. But what we have learned is that this is also the information. So you would find your closing inventory here, but as well as you would find your accruals and prepayments. All your adjusting entries, but the ones that we are doing right now would be your accruals and prepayments. So for the income statement, you would see these things in terms of the notes, and this will tell you which of the 4, if any. So like, for example, we have repairs paid in advance, that is prepaid repairs. And what we had learned, when you identify whether it's an accrual or prepayment for each of them, then you would know what to do in the income statement to the expense and the revenue. So there's our battery man again, our wonderful battery man. And the AA stands for add accruals. So once you identify it as an accrual, that means you add it. We're going to keep on saying it over and over. So by the end of this lesson, I hope it's stuck in your head. In fact, you're dreaming it. And you less the prepayments, and that goes for both the expenses and the revenue. It's always battery man and yes, Fergie. So this is in your workbooks, this little note, and as you can see, it says if you want to find what is the expense that goes into the income statement, it is the expense paid, which you find in the trial balance, add the accrual, right? And if you want to find the expense in the income statement and there's a prepayment, it will be the expense paid, which is in the trial balance, minus the prepayment. So this was the exercise that we had done. I don't know if you remember, and once again you can always stop the video and you can take a look at the answers. I gave you a bit of a challenge for some of these, but for the rest of the lesson we are just concentrating on two things: add accruals, less prepayments. So you're not going to have to do any of the other types of calculations, which was just to emphasize the different ways. We are sticking simply to add accruals, less prepayments. So just like for the expense, it is add accruals and less prepayments. It's the same thing for the revenue. You want to find your revenue for the income statement. It would be the revenue received, which you find in your trial balance. And if there's an accrual, you will add it. If there's a prepayment, you would minus it. And this was the activity that we had done. We are just going to be concentrating on the very easy ones. Like for example, this is a prepayment with a typo. Rent received in advance. When you see in advance, it is a prepayment, and you always less your prepayment. And accruals, so outstanding means accrual, you will add it. So here are the answers for this activity that you would have done in the past. So if you want to check anything, you can just stop the video and take a look. So this is basically both of them together. So you could just freeze it here, but we are just going to move on. This was our example for our previous lessons, so we're just going to go through very, very, very quickly. The trial balance in this case shows the amounts paid and received, and the notes show whether it's an accrual or a prepayment. So once again, what we're going to emphasize: you add your accruals, you less your prepayments. So for this is what we ended up with. Repairs paid in advance, $50. Since it's a prepayment, repairs is an expense, you would have gone to repairs under expense. And what I had emphasized, remember, is you show your working, so you minus your prepayment, and you got the $450. So that is what you're going to do for each time. For all the exercises, going to be repeating over and over until it's stuck in your head once again. And we had to revenue, and you can tell from this, since we left it was a prepayment, that would be this one here, the rent received in advance. And the rent revenue, note number 4, was interest revenue owing $25. That means accrued, so we added it. Where did we get this 100 from? Your trial balance, right? So we're going to emphasize once again, the trial balance is where you find the amounts paid and the amounts received, and the notes tell you which accrual and prepayment, if there's an accrual and prepayment for it. Right, so I had given you this activity. We never got a chance to correct it because we were rushing to move ahead, so we are actually going to do that now. So your activity 6.7 in your workbooks, you have Mr. Small, and you can see here that you have your trial balance, which once again shows your amounts paid. These are expenses because it's under debit, and the amounts received, these are revenue or income because it's under credit. And down here you have your adjustments, your accruals and prepayments. And you can see that you have 3 accruals and prepayments. So we're going to take a step by step. First, I'm going to show you how I do it, because you don't have to do it in the same way that I do it. I will show you another way as well in terms of the order, but it is still, you supposed to get a system to get all of it, right? Because it's the same thing that you do at the end of the day. It's just that you can do it in any order that you feel most comfortable with. And I am most comfortable going to the trial balance. And when I go to the trial balance, I identify the expenses and revenue. For example, since it's an extract, you already just have expenses and revenue. But when we go to do the full ones, you would see everything: assets, liabilities, income, capital, and expenses. But in our example, you have your expenses, 1, 2, 3, and you have your revenue. So you identify, and then you go to your notes and identify for each one whether it's an accrual or prepayment. And if you identify it as an accrual, you will add it. And if you identify it as a prepayment, you would minus it. As easy as that. So we're going to start, as I said, I go to the trial balance and I am going to go in order. You don't have to go in order. So I go with rent. Rent is an expense. What I do, so we have rent. I would look down in my notes here. Do we have any adjustments for rent? And you would see that yes, we do. We have, for notes number 1, we have that rent outstanding 200. Every time you see outstanding, it means that it is owed, and that is an accrual. And what do we do with accruals? AA, we add the accruals. So after you have noted that, you actually go to your income statement. Rent is what? It's an expense. So you will go under expense, you put rent, and then since you have an adjustment, you are going to show your working for the adjustment. And your working would be the amount paid, which you find in your trial balance, which is 4,400, add the accrual, which is 200. So you add 200. And the answer you get, you would put it in the, usually it's the second column, the middle column. But when we are doing the full income statement with all 3 columns, you would see better which column and all that it goes into, right? So your answer, 4,400 plus 200 gives you 4,600. So after you have done that, you can always check it out. But I go back to my trial balance and I find the next one. It's insurance. Insurance is an expense. Once again, I go to my notes. I look down in my notes and I check to see, is there any notes that pertain or relate to insurance? And we see that yes, there is. Insurance paid in advance. 300. Paid in advance means it's a prepayment. See how easy? And what do you do with prepayments? Do you add prepayments? No. You less the prepayments. So what you do, you simply go into your income statement. What is insurance? Insurance is an expense. So you will go under expense, as you see right there. Always put your working. So your working would be the amount in the trial balance less the prepayment. And how much is your prepayment? 300. So you put that working, and 500 minus 300 gives you 200. Simple. Move on. So the next one is interest on loan. So I'm in my trial balance, interest on loan. What's the next step? You go to your notes and you look for anything related to interest on loan. So we go down here, and do you see anything related to interest on loan? No. So what do you do in that case? Don't ignore it, because interest on loan is an expense. All expenses go into the income statement. So you would simply still go into your income statement under expense and put interest on loan. Since you have no adjustments to make, you just simply put what is in the trial balance, which is 1,600. Easy? Right. So we will move on to the next one, which is commissions received, which is revenue. You will go down into your notes and look for anything related to commissions received, and there is nothing. So what do you do? Once again, you still have to put it into your income statement. Since it's revenue, you will go under revenue and you will put commissions received. And since there are no adjustments, there's no working to be done, you just put exactly what is in the trial balance, which is 2,900. Last, we have rent received. Rent received is 4,800. So you check down in your notes. Do you see anything? Yes, we have something related to rent received in advance. It's in advance. When you see in advance, it's a prepayment and you less prepayment, so you would less it. So you're going into your income statement. It's revenue, so you go under revenue. You write the name of the revenue, which is rent received. Since there is an adjustment, you put your working, which would be the amount in your trial balance, 4,800, less the prepayment, which is 1,200. So the amount in your trial balance, 4,800, less the prepayment of 1,200. And the answer you get is 3,600. And you're done. You make sure that you got everything, right? So you check and you make sure that you accounted for everything. So you have 1, 2, 3, 4, 5. You have 5 of them. 1, 2, 3, 4, 5. So we good. But we'll get back into that a bit more later. What we're going to do now is some of you might have thought, why didn't we just check the notes? So I prefer the going to the trial balance and going through each one and then checking my notes after. Some people may feel better about going to the additional information or the notes and going that way. So I'm just going to spend some time just showing you that it can be done that way. It is your choice. But after I show you this order, for those who might prefer this order, I will stick to my order, which I like the trial balance. But feel free as long as you get the correct answer. So this time we're going to go to the notes first. So we're going to rent outstanding and you identify which is it an accrual or a prepayment. Outstanding means it's accrual, and what do you do with accruals? You add the accrual. So you will just go into your income statement, rent. Once again, you must put your working and put your answer. So you're not going to spend much time with the explanation because we already did it. This is just doing it in a different order. So you go to the next note. It is insurance paid. In advance means it's a prepayment and you less prepayments. So you will go under expenses because insurance is an expense. And to show your working, it will be the amount in the balance sheet, the amount in the trial balance less the prepayment. And the answer would be 200. After you do that, you go to the next one, rent received in advance, which is a prepayment. So therefore, you would just find the amount in your trial balance. Since it's revenue, you will go under revenue. You write rent received and you put the working for it. Now, I just want to point out, notice it is the revenue or the expense. It's not, don't put accrued or prepaid in your income statement. Remember that, okay? So even though you identify like this, for example, as a prepayment, you're not going to go here and put prepaid because as we're going to revise again, prepayments and accruals are either current assets or current liabilities. So I don't want to see that there. It is rent received and you're working, and then you will put your answer. So this order, for those who prefer to go with the notes, my only problem with this order is that you have to make sure that you got everything, because the notes is only 3 notes. Does that mean that you only have 3 things or items to put into your income statement? No, it does not mean. So if you prefer to do it this way, that is okay, but just remember that you will now have to go and check your trial balance to see if you got all the expenses and all the revenue. So, for example, did we get rent? Yes, we did. Right? Did we get insurance? Seeing it here? Yes, we did. Did we get interest on loan? You seeing any interest on loan under expenses? No. So you see why you have to be careful. If you choose, or if you feel more comfortable going to the notes, you just have to remember you have to go and check your trial balance, because it's all the income and all the expenses that have to go into your income statement, which is why I prefer to go with the trial balance first. So that is just explaining why I prefer that. If you still feel more comfortable going to the notes, just remember you have to go back to the trial balance to look for those that you may have missed. So because we don't have interest on loan, we have to go and put it under expenses, interest on loan, and since there are no adjustments, you're just going to put the amount in the trial balance. Good. Commissions received, once again, you check your income statement. Do we have anything for commissions received? No, we do not. So you're going to have to so we put in our interest on loan, and that is why we now crossed it out. But now we're going commissions received. We did not do that. So you have to go into your revenue and put your commissions received, and since there were no adjustments, you just put the answer, 2,900. And since you have put it in, now you can see, you can check it off or cross it off or whatever. You have already gotten it. And then the last one, rent received. Is it there? Yes, it is. Remember, it's there. So cross it off, and that means that you have done everything. So this is your answer, whichever order you do it from in your process. This is the answer you're supposed to get. You see, 1, 2, 3, 4, and 5. So this is your answer. You can stop your video if you need to look and make sure. And since it's an extract, this might be enough where you just put in, or you may have to add it up, and you just simply just tally. You draw your line, a tally, and you put it in the last column. Same thing for your expenses, and this will be the complete extract for 6.7. This is your answer if you want to check and double check. So we're going to do another activity, but as I said before, I'm going to use my method, and that is to go into the trial balance. We're going to go through this quicker because you'd realize it's the same thing over and over again, which is the point that I want to get you guys to. So we go into the trial balance, and then we will go to the notes and identify whether it's an accrual or prepayments, and you just add the accruals and less the prepayments. So our income statement, we go rent. Rent is an expense. We look down in our notes. Are there anything? Yes, there is rent owing. Owing means accrued. And what do? You add accruals, AA. So you will just go to your income statement. Rent under expense. Must put your working. 2,400 from your trial balance. Plus the 600. Which is your accrual, and the answer that you will get, 3,000. Easy. Good. Next one, in your trial balance, we have an expense, insurance expense, 400. Check your notes. Anything? Yes. We have a paid in advance, which is a prepayment. And what do we do with prepayments? We less the prepayments. So insurance is under expense. Put your working, which is 400 from your trial balance, less your prepayment of 100, and the answer you get, 300. Moving on quickly, salaries. Once you get a groove, you see what it will be very, very quick. So you have to practice, right? So salaries, expense, you look down in your notes, nothing there for salaries. So what do? Don't ignore it. You go to your income statement. Salaries is an expense. You put it there, and you just put the 3,000, which is the amount in your trial balance. Moving on quickly, commissions received is revenue. You look below. Is there anything for commissions received? Yes, there is. There is a still owing, which is an accrual. What do? AA, add accruals. Go under revenue, you write commissions received, must show your working, 2,300 from the trial balance plus your accrual of 900, and that gives you 3,200. Last one, rent received, 3,600. Check below in your notes. Yes, there is an adjustment. It's in advance, which is a prepayment, and you less prepayments. So you less your prepayment, and what you end up with would be going to your income statement under revenue. 3,600 from trial balance less the prepayment of 800. 2,800 is your answer for rent received. Good? And you're finished. But just to make sure that you got everything, remember what you said, you will just double check. But you have this here, and you can just tally it. And this is your answer for 6.8 for Mr. Big, right? So this is an income statement extract, and you see how quick the process is once you have your nice little routine groove, So it's the practice, and when you practice, it becomes very easy. But the main thing is always show working. You must always, you're checking the answers. Each answer that I have shown you has working. So that is extremely important. Please always show your working. So we're going to go to the balance sheet. As we had done when we did this topic, this lesson, the 4 types of accruals and prepayments are either current assets or they are current liabilities. They're one of the two. They're nothing else than that. So the 4, where the 2 current assets are your prepaid expenses and your accrued revenue. We stressed a lot on that, so I'm not going to stress it again. And then your 2 current liabilities would be the accrued expenses and the prepaid or unearned revenue. So this I hope you all have this memorized. If not, please work on it. You will see there your 2 current assets, prepaid expenses, accrued revenue, your 2 current liabilities, accrued expenses, and prepaid revenue. So when we are preparing the balance sheet, there are our notes again. But in this case, where the income statement, you had to add the accruals and less the prepayments. For your balance sheet, what you have to do is just identify which type of accrual or prepayment it is, and then put it or identify whether it's a current asset or a current liability. Right? So once again, for your balance sheet, you're looking at different things. When you identify whether it's an accrual or prepayment, you're going to also identify it's an accrued expense or accrued revenue, prepaid expense or prepaid revenue, and that will determine whether it's a current asset or a current liability. So this was our example when we did that lesson, and the notes in this case, they tell you the accruals and prepayments, and it is what goes into the balance sheet. With the income statement, when you identify the accrual or prepayment, it was to add or less. For the notes for your balance sheet, it tells you what is supposed to go into the balance sheet under current assets or current liabilities. So you don't have to look at the trial balance. In our examples, our notes are very, very, very simple. So the only thing that you need to look at would be the notes. And we have four of them. And we would have done the lesson where we identified each of them in terms of whether they were a current asset or a current liability. What you should remember is that your current assets, they are the 2 current assets, once identified as a prepaid expense or an accrued revenue, that goes under current asset. And then once identified as an accrued expense or a prepaid revenue, also known as unearned revenue, that goes under current liabilities. So very, very quickly, we could go really, really quick here. Paid in advance is a prepayment. Repairs is an expense. So it's a prepaid expense, means it goes under current asset. Next one, utilities accrued, accrual, expense, so it's an accrued expense. You look here, accrued expense, it's a current liability. Rent received in advance is a prepayment. Rent received is revenue. So what you have is a prepaid revenue. And what is a prepaid revenue? Current liability. And interest revenue owing, once you see owing, it's an accrual. And as an accrual, accrued what? Accrued revenue. So you look here, you see accrued revenue. That means it will go under current asset. So for this example, this is what we should have gotten, or what we did get actually for our answer. And what you would see here, your prepaid repairs, accrued interest revenue under current assets, and your accrued expense, which is utilities, and prepaid rent revenue under current liabilities. And the last lesson we had stressed on it, just going to stress really quick because I spent a lot of time stressing on it. Not going to do that now. Always put the name of the expense and the name of the revenue. And you must have the prepaid or accrued before it. Good? So you must have like the utilities, very specific, accrued utilities, prepaid rent revenue. Do not ever put just accrued expense, accrued revenue, and so on, right? So every time they ask you for a balance sheet, this is what you are doing, identifying whether it's a current asset or current liability. And it's prepaid expense and accrued revenue is a current asset. Accrued expense and prepaid revenue is a current liability. So this activity was given to you guys. These are the answers. And you would see under current assets, your accrued revenue is a current asset, your prepaid rent, and your prepaid insurance. And the emphasis was that you had to have them separately. You cannot put prepaid expense and put a total of 9,600, right? And then your well, that's just you totaling it. Your current liabilities, you had prepaid construction fees, accrued interest on loan, and accrued salaries. And once again, you have to keep it separate. You cannot put it as a total. And then you would just tally it as that. And if they wanted you to, then you would do your working capital. Reminder, working capital is your current assets, which in this case is 22,190, less your current liabilities, which in this case is 19,570. So your your working capital ended up as 2620. So this is your answer for this one. If you need to double check your workbook and your answers and make your corrections, you can once again just stop the video and take a look at the answer here for you. All right, that was mainly correcting some of our previous work. We have just been doing the extracts, so we're just going to go over it a little bit more one more time before we go into doing the complete or the full income statement and balance sheet. So using our example from last week, the trial balance tells us the expenses that are paid and the revenue that are received for that period of time. And then the notes will tell you which accruals and prepayments or adjustments need to be done. And then when you're preparing it and you're checking your notes and you identify the different accruals and prepayments, all accruals, you will just add it to the expenses paid and the revenue received. And all prepayments, you will just less it or minus it from all the expenses and revenue that will be in the trial balance. So that is the summary of what you would do. And when we had our example, this is what we did in terms of you're getting it in terms of the income statement. You put your revenue and you must have your working. You put your expenses and you must have your working. And the answers go in the middle column. And then if they ask you to do a balance sheet right after, the notes will tell you once again, the accruals and prepayment. But instead of us looking at what we have to add in terms of add accruals and what we have to less in terms of less prepayments, all you would have to do for the balance sheet is you would decide, or you would determine, based on what you identify as your adjusting entry, your accrual or prepayment. When you identify it, you're going to know whether it goes under the current asset or current liability. So like in our example, the notes told us whether it was an accrued expense, accrued revenue, prepaid expense, prepaid revenue, and that is what goes into the balance sheet under the assets and the liabilities. So here you would see that in our example, we had the two current assets, which would be the prepaid repairs expense and the accrued interest revenue. And we had two current liabilities, which would be the accrued utilities expense and the prepaid rent revenue. Once again, we are emphasizing that you must have the name of the actual expense and the actual revenue, and you must always, and you must have prepaid or accrued for it to be in the balance sheet, because it's the accrued and prepayments that are the current assets and current liabilities accordingly, right? And this is our complete answer for that activity. So you actually get to see it all the time. We were showing it separately. So this is the first time you're seeing here, and this is what you're going to be required to do. You're going to be required to do both the income statement and the balance sheet. You're not going to have to do them separately, right? So we're going to start off though with the extracts, but these are all nice little animations that represents, and you would see that for the income statement you have to remember Batteryman and you have to remember Fergie, right? So Batteryman is the add accruals. Always have that in your mind. Any accruals for a period, whether it be revenue or expense, you are adding that accrual to the amount from in the trial balance that represents the amount paid and the amount received. Add accruals. AA batteries, Batteryman, AA. And then you do the opposite. For prepayments, it would be the less prepayments. And in that case, you have Fergie, right? So less prepayments. So remember those two people. But then for the balance sheet, you're not taking on Batteryman and Fergie, right? It is not about that. You've already done that where you've add and less. So you add your accruals, less your prepayments. When you go to the balance sheet, you are concerned about assets and liabilities, more specifically the current assets and current liabilities. The current assets where you have your prepaid expenses and accrued revenue, and your current liabilities where you have your accrued expenses and prepaid revenue. So that is what you're going to be focused on for the balance sheet, right? So here we have activity 6.10. What you're going to be required to do, the income statement that just deals with the revenue and the expenses. All you have to do is when you identify the accrual or prepayment, you add the accruals and you less the prepayments. And then you will have to do the balance sheet. And with the balance sheet now, what you are concerned about most is identifying the accrual and prepayment and putting it under the relevant current assets or current liabilities. And we should know by now that the two current assets would be the prepaid expense and the accrued revenue, and the two current liabilities would be the accrued expense and prepaid revenue, where prepaid revenue is also known as unearned revenue. So that is what you're going to take into account when you do your activity, both income statement and balance sheet. Just concentrate on one at a time. The first one, income statement, AA and less P, and then your balance sheet where I put them under the current assets and the current liabilities. So we're going to go into it. As I said, we are not going to focus on the first part, which is complete the table. we are going to go straight into doing the extract. So this is the information that we need. We need the trial balance, and then we need the additional information or the notes which tell us the accruals and prepayments. So for the income statement, as you see, you have your revenue and expenses, and we're going to go in the order very quickly, hopefully, the order that I like to, which is the trial balance. And we go first to the rent, and what you do after that, check your notes. So we go down and we check our notes. Is there anything related to rent? Yes. So in your notes, you would see that we have in advance, which is a prepayment. What do you do with prepayments? Less it. So you less prepayments. So you will go rent is an expense. You go under expense. You put rent. The amount in your trial balance, 42,500. You lessen the prepayment of 12,200. Put the answer in the middle column, 30,300. That's it. Right? You feel happy, you pat yourself on the back, you move on to the next one. Next one is insurance. What do you do? After you have your insurance, you check for it. You check, are there any notes? Yeah, there are. It's a paid in advance, which is a prepayment. What do you do with prepayments? You less it. So you go under expenses, you put insurance, the amount from the trial balance less your prepayment. Make sure and put your working, and the answer is 3,800. Moving on. Salaries. What you do next? Check your notes. You're looking down, salaries. There we go. So you notice it's not in any particular order. You found salaries. There is an owing, which means there's an accrual. So what you're going to do, you're going to add your accruals. You go under expenses, because salaries is always an expense to the business. You put your working, which is the amount from the trial balance, add the accrual, and that gives you 24,000. Good? We move on. Commissions received. Look in your notes. Anything? Yes. Once again, we have commissions not yet received. When you see not yet received, that means it is owing, and that is an accrual. What do you do with accruals? Add the accruals. So commissions received is revenue. So you're going to go under revenue, put commissions received. Make sure and put your working, which is the amount from the trial balance, which is the amount received. Add the accrual, which is 800. You saw that in your notes, and the answer that you get is 13,000. You move on again. Rent received. Look in your notes, anything for rent received. There you go. You find something related to rent received. In advance means it's a prepayment. What do? Rent received in advance, you less the prepayment. Since it's a revenue, you go under there, under revenue, put rent received, put your working, the amount in the trial balance, less the prepayment, and the answer goes in the middle column. Last, electricity. You check your notes, electricity, not seeing anything for electricity. So electricity is an expense. You simply go under expenses, electricity, and you would just put the amount in the trial balance because there are no adjustments, no accrual or prepayment for it. And that's it. That's basically the process. Trial balance, your expenses and your revenue. Check your notes. If it's an accrual, you add it. If it's a prepayment, you less it. And then you go and you put it, show your working, and the answer goes in the middle column. And that is what is repeated over and over again once you just get your little process. Notice that I did my little notes because in exams and stuff, it helps if you just jot down. And I mean, it doesn't take much to put minus P and AA. If that is how you have been practicing it, you know that AA means add accruals and less prepayments. Right? So we have this activity. What I always suggest is that you check to make sure that you got everything. So have we catered for rent? Yes. Have we done insurance? You check in your income statement. You have insurance? Yes. You have salaries? You check and see. In case y'all are not knowing what I'm doing. Salaries, you have it? Yes. Check. Commissions received? Do you have it in your income statement? Check. Ooh, I'm going a little faster than right. So commissions received, do you have it in your income statement? Check. Rent received, you check for rent received. Do you have it? Check. Electricity is supposed to be under expense. There it is. Check. So you have all of it done, so you can feel very proud that you have that. If you want to do additional checks very, very quickly, if you have time and you just want to check over, you can check it by the notes now. Did you do the less prepayment for rent? You would check and see. You have working? Yes, so check. Did you do the adjustment for insurance? That's the word, adjustment for insurance, yes, you list it, so check. Rent received in advance, you go up to revenue. Did you do the adjustment? You see you're working there? Check. Salaries owing, did you do it? Yes, you did. Check. And you can always do a quick check as well to make sure that you had owing, so you added it. So you will check and see you're working and make sure that you did add it, right? Because it was an accrual. And last but not least, commissions received. Did you do the adjustment? Yes, you did. It was an owing, so check. And that means you got everything, right? So you saw that we checked both things in this case. If you don't have time, one is enough, but always try to find a method to do a quick check to make sure that you got everything that there is. You can also do it like this, where you have how many expenses and revenue. So you check 1, 2, 3, 4, 5, 6, and you check your income statement 1, 2, 3, 4, 5, 6. So you notice that you had it. So I'm just giving you all some little pointers. This is what I tend to do after I have practiced and practiced and practiced, so that I finish my income statement and balance sheet faster. It also means that you can do these checks because you now have time to be able to do it. So the main thing is always practice. Right, so this is your answer there for you, and you will just tally it. So your total revenue is 44,600, and your total expenses would be 59,300. And this is your answer. If you need to double check, this is what you should have for 6.10 for your income statement. But we are now going to go on to the balance sheet. And remember what we're concentrating on now? So we're leaving Batteryman and the AA, the add accruals and less repayments. We're leaving that behind now. Wipe that out. We already dealt with that. Check. Right? Now we go into the balance sheet. So your frame of mind now is about the doing the current assets and the current liabilities. So that is what we are now going to be focused on. Current assets, current liabilities. So the 4 prepayments, once you identify, you're going to be putting it under the current assets or the current liabilities. So in this case, we don't need the trial balance. All we need would be the notes, right? Because the notes are what are telling us whether it's an accrued expense, accrued revenue, prepaid expense, prepaid revenue. So that is what we're going to do now. So we're going with, in this case, we don't have to do the trial balance. So we're going through with the notes, right? For those who like that. So rent paid in advance. What is rent paid in advance? That is prepaid expense. What is a prepaid expense? So in the exam, you will have to have this memorized. You're not going to have it here in any book, or no cheating or all that, right? This is what is going to be in your brain. So once it's identified as a prepaid expense, prepaid expenses are current assets. So you're going to go under current asset, put prepaid rent. You don't have to put the rent expense. Prepaid rent, it's understood. It's the expense, and you put the amount in the column, in the middle column. Okay, that's it. You can move on. Next one, insurance paid in advance. In advance again is prepayment. Insurance again is an expense. So we have another prepaid expense. What is a prepaid expense? It's a current asset. So you go under current assets, put prepaid insurance, put the amount. This too easy? Yes, it is. Right? Next one, rent received in advance. Once again, it's a prepayment, but it is not a prepaid expense. It's a prepaid revenue, also known as unearned revenue. So what is a prepaid revenue? It is a current liability. So you just go under current liabilities, you put the prepaid rent received or prepaid rent revenue, whichever one, and you put it. Reason why I'm putting it in the first column here is because we have more than one, and then you would see, I don't know if you remember, this is how we have practiced it when we were doing the balance sheet. So you continue to do it just this way, right? So we put it in this first column here. Next one, salaries owing. Owing is an accrual, so accrued, and salaries is an expense. So what is an accrued expense? It's a current liability. As a current liability, you just go under current liability and you put it under current liability, accrued salaries, 2,400. And then we just move on. Commissions not yet received. When you say not yet received, of course, we said that is an accrual. The fact that it's received means it's revenue. Once you're receiving something, it's revenue. When you're paying something, it's an expense, right? Remember, you're always looking at it from the business point of view. So the fact that they said had not received as yet means that it's commissions received or revenue. So this is an accrued revenue. And what is an accrued revenue? It's the current asset. So you will go under current assets, put accrued commissions received, 800. And that's it. And have we done all? Yes, we have. So this would be our answer. And just like we did for the income statement, you will just have your tallies. So in this case, our total current assets is 13,400. And our total current liabilities would be 5,600. And if we were to be doing an extract, and they usually ask you to do the working capital, to show the working capital, just remember that your working capital is just your total current assets less your total current liabilities. And therefore your working capital would be 7,800. And this is your answer for 6.10, the balance sheet. Yay! If you got this, that means you got it correct. So what we had been doing all the time were the extracts. Now, and this is where this is the important part of our lesson. Everything that we did before, all the review and overview and all this kind of thing, and the constant repeating and repetition and all that sort of thing, is leading up to this. This is what you are aiming towards, being able to do not just the extracts, because some questions may ask you just for the extracts, especially for the balance sheet, with the current assets and current liabilities. But you have to know how to do the entire income statement and the balance sheet. So you had practiced it before without any adjustments. Now we are going to do it with the accruals and prepayments, using what you should have learned with all that practice and repetition and stuff like that, right? So for the income statement, it stays the same. It's the same format. So remember what I said before. Go and learn or revise, practice your format for the first part, because this is the most challenging one that you have to learn. You see carriage inwards. Carriage inwards is an expense. So this is the only one up here that you might get an accrual or a prepayment. If you see anything with carriage inwards, like an accrual or prepayment, you do the same thing you do for everything else. AA, add accrual, or you less prepayment. Simple, okay? So here you would do that. But the main part of the income statement that has to do with accruals and prepayments would be what we were doing before, which would be the revenue. And you just do it exactly after you have done the first part and you reach the part with the revenue. You do what we have been doing all the time, which that extract, that part of it you do here, which means that you're going to put whatever it is, and you're going to just have your working if there's an adjustment, and put your answer in the middle column. The same thing that we had just been practicing. So the same process. You would just go to the trial balance, all your revenue. So you can do it in that way. You can identify all of your revenue, write down all of your revenue, check your notes for each one to see if there's an adjustment. If there's an accrual, you just add it. If there is a prepayment, you just less it, minus it. Simple as that. Put your working, then put the answer in the middle column. And you do the same thing for the expenses. You identify the expenses, you check each one like we did before in our examples and our activities. You check each one. You see whether there's an accrual or a prepayment. If there's an accrual, you add it. If there's a prepayment, you less it. If there's no adjustment, you just put it in with the amount that is in the trial balance. Simple. And then you just move on your revenue less your expenses, and you get your net profit last. Right? So that is for the income statement, and then you will have to move on to the balance sheet. If you would remember your balance sheet, the first part of your balance sheet is like this. You start with your non-current assets, then you have your current assets. Usually you would have had your inventory and accounts receivable, your bank and your cash. But because we have now done accruals and prepayments, right, this is in shaded and this is the emphasis, you now have this that is new. And down here for less current liabilities as normal, but you just have these two things that are new. If you realize, the new things are just placed kind of smack in the middle, right? So it's like inventory and accounts receivable, and then you have these two. These can be in any order, by the way. So you could have accrued revenue and prepaid expense. It doesn't matter that order for these two. But the others, it must be in this order. So you start with inventory, and then you have accounts receivable or debtors. Then you have these two, and then bank and cash. And then for your current liabilities, so it starts with accounts payable, bank loans, or you can probably have these the opposite of each other too. You could probably start with bank loans or accounts payable, but that they don't make a fuss as much for these things as they do for the current assets. You can't make any mistake for the current assets or the non-current assets in terms of order, right? They're a little bit more relaxed with you for the current liabilities for certain things, even though the bank overdraft must always be last. Just remember that one. For current liabilities, bank overdraft is always the last in the order for your current liabilities. Good? And then you have these two new ones here, the accrued expense and the prepaid revenue, right before the bank overdraft, if there is a bank overdraft. And then you have the second part, which is the financed by. It's the same format. The only thing that has happened is that basically we have the new area, which would be your current assets and your current liabilities. But doing the balance sheet is the same thing. You start with the same things. You just have these two new things here. You work out your working capital. Your working capital plus your non-current assets gives you your first total. And then you have the next side, with your opening capital and your net profit that you would have calculated in your income statement. And then your current liabilities, and you have your second total. And as we are saying right here, make sure that it balances. And that's it, right? So you remember, you would have learned it in this order. I ate baked chicken. So inventory, then accounts receivable, then bank, then cash. But if you have any accrued revenue and prepaid expenses that needs to go in, it is going to have to come after your accounts receivable, right? And then you will continue with your bank and your cash. Good? And then for the current liabilities, is the same thing. You're accustomed to the accounts payable and to any bank loans due within 1 year, and the bank overdraft if there is any bank overdraft. So all you have to now do is to add these new things, which would be the accrued expense and the prepaid revenue. Simple as that. This is the only thing that changes in your balance sheet. These two items are just added, and you notice they kind of go smack in the middle of each one, your current assets and your current liabilities. But just learn this format, right? Especially your current assets. Remember how much we focused on learning the current assets, right? So this is just how it looks. If you notice, everything stays the same except for these things. That is what I'm trying to tell you. So it's not like you're going to be relearning anything. You're just adding to it. And that is how it's going to be from now on. You have your foundation. You've learned your foundation. You're just going to be slipping in some things in your already known balance sheet or income statement, right? So this is your balance sheet, your full balance sheet with the accruals and prepayments. This is shaded here is just the only two new things. Everything else stays the same. So this is the only area that has any changes in it. Everything else in white just remains the same. Your accruals and prepayments, it only affects the current assets and the current liabilities. Just memorize that your prepaid expense and accrued revenue is a current asset, and your accrued expense and prepaid revenue is a current liability. Nice. And after you have done that, full balance sheet, just do your balance sheet and remember to balance. Once you balance, you're good. When you are asked to do both the income statement and the balance sheet, first you will do the income statement. You start with your first part, which is called the trading section, and you would work out your gross profit, and then you will move on to your revenue and your expenses. And that is where you have to check for your adjustments in terms of your accruals and prepayments. And once you just remember that you add your accruals and you less your prepayments, you're good. Always show you're working in the income statement. And then for your balance sheet, your focus is on identifying the accrual and prepayment in terms of current assets and current liability. And you just have to remember that your current assets would be your prepaid expense and your accrued revenue, and your current liabilities would be your accrued expense and your prepaid revenue. Simple. And these are your activities that you have to do in terms of both the income statement and the balance sheet. And as you can see, it is not just expenses and revenue, because you're not doing an extract, you're doing the complete thing. So we have the formats in your workbook, plus I just showed you the formats there in the video. And just remember to go through the different processes. You always start with your income statement first. You can let me give you an example. Insurance is an expense. So you have insurance as an expense. You will go down to your notes, look for insurance. Is there anything with insurance? You're seeing here, insurance in advance. Paid in advance means it's a prepayment. So what you're going to do, insurance, what is in the income statement, the trial balance, 2,400. Paid in advance, prepayment, you less it. So it will be the 2,400 less the prepayment of 2,400. So how much insurance is going to go into your income statement? 0. But still put it in and show you're working, so that everybody knows that you understand exactly what took place. Okay? So that's it for this lesson. Please do the assignments. Try attempt it. Remember that your income statement, it's to calculate your net profit. The first part is the trading section. The second part would be your profit and loss. But the aim is to calculate your net profit or net loss. And then your balance sheet. Remember, at the end of the day, your balance sheet is only correct if it balances. And what does that mean? If both totals are equal. If you do not get it to balance one time, just go and try again. Closing inventory is what goes into the balance sheet. Always remember that. Remember, we stressed on it before. So that is one of the mistakes that you might have to look at. But just attempt, and then go and check back if you don't. If you do get it to balance one time, fantastic. But try to enjoy and relax while you're doing it. See you.